let's talk about Obama and taxes, what it means, what's going to happen with our taxes and so forth. You've got to understand a couple of things, because during the whole campaign, Obama talked about taxing the rich, people above $250,000 in income and so forth. Let me explain a couple of things to you, which you probably don't realize. You may know somewhere in your heart, but you don't realize. The rich people in this country don't pay that much in taxes. And look, we study the numbers, all right? Everybody lies about the numbers, but we study the numbers. First of all, wealth is not taxed in the United States. Income is taxed, not wealth. The rich have tremendous wealth behind them. They own stocks, they own corporations, they own property, they own royalty rights, they own oil wells, all right? That is not taxed unless it's in the form of income. So when you tax the rich, 35% on the upper end of tax bracket, 38%, 39%, it may go to 42% under Obama and so forth. That's not where their big money is. Their big money for the rich is in the form of capital. That capital is constantly working and compounding itself at some rate, okay? It is only taxed when it goes from capital, when it goes from wealth to income. That means a sale. Why is Warren Buffett the first or second wealthiest man in the United States and maybe even the world? It's because he doesn't sell his positions. He doesn't sell his capital positions except very rarely. And then when his capital positions are sold, they're taxed at a capital gains rate. But they may be compounding themselves for 10, 15, 20, 30. Some of his positions are 40 years old, constantly compounding themselves. They haven't been taxed in 40 years. They're only taxed on sale. And since he's going to give billions of dollars to Bill Gates to give away to charity during the course of his life and also after his death, it will never be taxed. This is why Warren Buffett is the only truly wealthy man in the United States and maybe even the world that fills out his own tax return. Because his tax return is simple. There's no complexity to it. He takes a couple of $100 grand a year out of Berkshire Hathaway. That's the only thing he takes out. The rest is all compounding. So when you talk about taxing the wealthy, yeah, they're going to tax dentists and doctors and lawyers who are making more than $250,000 a year. They're going to tax them. I understand that. Yes, absolutely. But the small business guy, everybody knows the story on the small business guy. The IRS just published a study showing that small business underreports their income by some 40% per year. So you don't have to worry about too much. The small business guy, he goes out to lunch, he brings somebody with him, he has a $100 lunch, he writes it off. The guy driving the UPS truck and the FedEx truck who's trying to eat a corned beef or tuna fish sandwich for $5, $6, $7, he pays full boat on that sandwich. No deductions for him. The business guy, all the gasoline is deducted, all of this is deducted. He takes a trip, he goes to Las Vegas, he meets a couple of clients out there, he deducts the whole thing. I mean, you have to understand how America works, okay? If you want more information on these type of topics, if you want to understand how the real world works and how to make money in the stock market and so forth, please come visit our website. And good luck to you. Bye-bye now.